What's going on, everybody? Welcome to the Steps to Soul podcast. Today, we are talking about negotiation strategies that close more deals, how to handle tough negotiations. The best part about doing deals, Chris, negotiations, and always the part that people seem to forget about. Everyone wants to focus on the valuation, focus on the numbers, but in reality, any good deal, there's going to be negotiation. And as we know, that is the hardest part to get two parties to agree to a whole bunch of terms. So,
Yes, it is.
it is, when money, legacy, and emotion are all on the table, negotiation becomes an art, as you know, and it's not just something you can wing. It's good to be prepared, have a strategy, and understand how negotiating is different for every topic, issue, and industry. Negotiating for a house sale is different than buying a business. Same with buying a car or any other product or service you want to use. And today we're going to really highlight, a couple key points. First off, what makes negotiations and business sales different, strategies for both buyers and sellers out there, because you both got to come from a different perspective, and kind of how us as brokers handle negotiations and what our role will be for those who don't know or haven't had a broker help them buy or sell a company. And from there, we're going to give you a bunch of little insights in what parts of the deal, what time of the deal, and how all those negotiation strategies roll together. Is there anything you want to add before we get right into it?
No, I think you hit the nail on the head. Negotiating a business sale it's not like haggling over a car or even in selling a house, right? You got I think it's because you've got somebody's retirement on one side of the table, and then you've got a buyer risking years of savings and investment on the other side. So you add in emotion, timing, taxes, financing. You suddenly you're not just talking about price, right? It's not just a number on paper. It's all this emotion. So as a broker, I'm managing not only the price, but psychology, logistics of things happening, and most importantly, trust, right? Buyer trusting me,
Yes.
seller trusting me. So, yeah, I know that's what we're unpacking here today. So I'll let you get into it.
That's all great points. And we'll start with the most important one we just spoke about on the intro is why negotiations and business sales are different. All the time I hear people say, well, it's like a real estate agent selling a house. I'm like, well, that's the easiest, I guess, comp, because people can relate. Everyone's gone through that process at some point, or has a family member or has seen a house listing online. They understand the theory behind it. You go in, you look to buy a house, you look online, or you see a sign, and you call, you ask the agent, and they give you kind of the 411, right? The kind of quick run through. But it's a lot different when you sell a business. And I can see some commercial real estate agents rolling their eyes right now, but it is. Let's just be honest. It's not the same as running a comp, looking at square footage, coming to a price per square foot, throwing a price tag on it, right? It's just not that simple. If it was, it'd be easy to sell a company, but it's not. So the first thing that are so different, that I would say that is so different, but is more, I hate to for lack of better terminology here, but it's like practicing surgery versus going to see your general practitioner. They're not, it's a whole different mindset how you start the process. We have to do so much pre-op work. We have to sit there and really, for brokers, run through the analysis of the business. And you're doing all this analysis just to give a visualization to the public, a blind profile, and it's tiny, right? So as a buyer, you're seeing this little bitty profile, but in the background, we've done a ton of work. And there's a lot of emotion that goes in it. And I don't think buyers always understand that. This seller, like you mentioned before, this is their life savings, right? Not their life savings and they're going to spend it, but this is their retirement nest egg. This is what they've put a lot of their money into, their time, their relationships, and they're walking away from that. Right. And there's a sense of anxiety with that sometimes. There's a sense of unknown. And for a lot of times, buyers don't realize the sellers have never met us up until often weeks before we start this process. So they're also working through a new relationship with us while we're having to bring in someone completely brand new that often we don't know. And it's three new parties in a room trying to be best friends.
And good way to put it. That's a great way to put it.
It's true, but and that can be hard to develop a friendship. If you're like me and you're past your 30s, 40s, 50s, you don't make friends that easy anymore. It's not like you just walk in and become best friends with somebody, right?
No, and you got to have that quick trust, like I talked about.
You're right.
Best friends need to trust each other. So you're asking people weeks into a relationship, hey, trust me, with this multi-million-dollar sale. So
that's true, and I think then becomes, we talk about emotionally charged for the sellers, emotional connections for the buyers. If you're like me, we've talked about it. Our wives, you're not leveraging everything we got to buy a good company. And for buyers, it means quitting a job. It means changing a lifestyle. And that's hard to do at any age, is change what you've known your entire life, especially if you've been a W-2 person and now you're going to have to come in. I think sometimes sellers don't understand that or don't always view that because they've been their own boss, right? When
Right.
you've been your own boss, you can do what you want. When you work for somebody else, you have a sense of duty and a sense of responsibility that you can't just wave around at your own free will in a lot of companies. There may be some where you can, contract workers, that's different as a W-2. And you leverage that to go buy a business, be your own boss. Sometimes those personality traits are different because we know business owners are different people. That's why they're their own that's why they're their own boss, right? They're willing to take that psychological risk. We've talked about that before. They're
Yeah.
willing to run their own company. Sometimes W-2 employees haven't quite made that full mindset jump yet. And that's where there's a lot of emotional conflict and just psychological conflict. You don't see it with buying a house.
Yeah.
Homeowner's a homeowner, right? Property owner,
Right.
property owner. Those are easy to relate to. So when people say it's like real estate, yes, but no. And so all those points we just mentioned, keep those in the back of your brain when you're starting the process, whether a buyer or a seller. The mindset matters.
Yeah, I
Next,
think like what'd you say
mhm,
about a house? Like if you're haggling over $5,000, it's all about the number, right? It's a little different in a business sale in the fact that sometimes haggling over $5,000, that's not the real disagreement. It's about the
mhm,
way it was presented, or ego got involved, or
mhm,
something got very protected, and that's the business, the employees,
yes,
whatever the case may be. So that's the nuance of business brokerage for us. We're not just closing financial transactions like a house, like a car. We are absolutely navigating emotion, and I think I loved your word legacy. We're negotiating that person's legacy. So I
yes,
know the best business brokers, we try to anticipate that friction point, and we manage
mhm.
them before they blow up, because once they blow up, you've seen it, I've seen it. It's almost too late to do anything about it.
You're right, and that's a great point in our topic here is deals can fall apart over small details. And in a house, like you just mentioned, it's a great point. $5,000. You're negotiating over a roof, right? Fixing the roof. That's a very easy quantifiable fix. That's not always the case with company structure, where hey, there's a number two here, but he's not quite ready to be the real number two when you come in as a buyer. Or hey, I thought you said you had 5 good skilled workers. Now we only have, what, three,
Yeah.
maybe four. Well, I was buying this company thinking I had workers to handle that. Now I don't. And perception, right? That is so important. And I think it's so hard for people sometimes to understand that and understand what it takes to, you know, get through those issues. Talk to me a little bit about other small you talked about, how small things can become big issues and derail deals, but give me a little insight on maybe an anecdotal story, Chris, of like a really small detail that blew up, and I'll give you one from me in a minute.
Yeah. Well, I don't have a small one, but I've got a big one that happens. I see it all the time in my larger deals, and that's working capital coming into play, right? Working
Yes.
capital adjustments, they are a top deal killer if they're not addressed early on. And
Yes.
most sellers have never even heard that word. They know accounts receivable, they know accounts payable, inventory, they got all that. But you start talking about a net working capital peg to a guy who's run his business for 20 years and doesn't deal with financing and all that stuff, you've got almost to educate him. So
Mm-hmm.
what happens is when that adjustment is not put into the LOI, or how it's going to be treated and handled, what happens is it gets sprung on them post LOI. It almost feels like the buyer's trying to claw back some value. And as
Yep.
brokers, we have to educate our sellers so early on in the process of this could happen. We need to arrange for it. That way, we're
Mm-hmm.
not dealing with it when the purchase agreement comes on, when due diligence gets drug on.
Yes.
So it's not so much the detail that kills the deal, but it's the timing of that detail. If it's handled early on, it's addressed fine. Everybody can
Mm-hmm.
play by the same game, play by the same rules. But if it's addressed later on, somebody's gonna get feel like they're getting less value in the deal.
You're 100% correct. And I also want to point out to people too, like in, let's say, a housing sale or a car sale, you're buying a fixed asset. The bank is loaning on a hard fixed asset. When you start changing terms or having, like say a late issue comes up like that, you got to work on working capital. The bank isn't always going to finance those numbers. That's not always considered as blue sky in some degree, and they get kind of jumpy on that. So you may have a deal, like you said, negotiated. All of a sudden, working capital becomes an issue. The bank may, well, look, we're not giving you any more leverage. And then that buyer now feels upset, seller feels upset, and it's all because a very small issue can grow. And as our job as business brokers is to identify that early on, have those discussions, and build that into our analysis. And I think buyers emotionally have to understand the broker didn't withhold anything from you. Not every deal can be structured the same. Stock sale versus asset sale, strategic buyer versus private investor. We can't present every deal with every situational clause on a blind profile ad or in the first few meetings. So allow us to use our expertise when you come in and sellers and buyers, let us give you that guidance. Don't just come in, thinking you've got it figured out or you don't worry about it, and then come back in 5 weeks and say, well, as a broker, tell your client he's got to do this. Yeah, that's the right approach, right, Chris? Tell him he has to do this. That really works. That's not how business sales
every
work.
Time. Right.
Yeah, every time. And that kind of leads us to the next kind of major issue is common pitfalls of conflict in deals that we deal with all the time. I think the most important one is the purchase price expectations. What a buyer thinks it's worth, what a seller thinks it's worth. We all know you think your product's here, the buyer thinks it's down here. That is negotiation 101, no matter what you're doing, any industry, any product, any service. But I think sometimes buyers, they get this mindset of, I'm entitled to everything at a better rate because I'm taking the risk. But what the buyers forget too is the seller's also taking a risk. They're going to market and sharing proprietary information, even with non-disclosure signed. They're taking a risk if they're doing seller financing, transitioning. To them, a risk is I'm selling my company, and these are workers who are my friends or family members that could lose their job, my legacy. And I think often buyers and sellers focus so much on the hard detail point that they forget about the other issues, and they don't properly express concerns or needs with the broker until we've gotten past that point. Then they come back to it and say, oh, well, working capital, or inventory. It's like, no, the purchase price is what someone's asking for something. How you structure a deal, and you and I have talked about this 100 times, can be 100 different things. The number doesn't matter. It's what's the total consideration. How many times am I going to say that on this podcast?
Yeah.
The total consideration. Would you rather argue with your doctor about having a $5,000 knee surgery or pay a $10,000 one, but no, your knee's going to be lasting 5 or 10 years longer and have less PT? Yeah. It's to each their own.
Yeah. And I work with both kind of clients. I've worked with those who want maximum value at the closing table. They don't want any seller financing. And then I've got some clients. I've got one right now. He constantly talks about this. This is his question to me. What's my deal value after 5 years? So he's talking about the seller financing portion,
the total consideration,
interest rate. He's talking about if we're going to rent the building, how much rent he's going to get. So he's a long-term picture. But with him, it's very important that we bring in a buyer that he's going to be able to trust, that's going to take care of employees. He's going to he's not going to be in the business anymore, but it needs to be somebody that he feels very comfortable with. And buyers need to understand that, like, hey, you can't just come in asking all the financial questions and the cash flow questions. You better come in asking about the seller, their kind of motivation for wanting to sell, but also about the employees and their motivation for wanting to stay. That's very important to our clients as sellers.
No, you're right. And that leads to, you made a good point about transition post-sale. So often some buyers expect the seller just to hang around forever and be their lackey, right? When you buy a business, it doesn't mean in 3 weeks after the sale, you come over to the office and start digging around to learn. The day that deal is done, if you're smart, you're there. It doesn't matter if the owner retained a portion of equity. You need to establish yourself as the owner and establish those roles and get diving in 101. Most owners will give you a month of training and transition. That's pretty common for a lot of size businesses. Now, if you get into really 40, 50, 60 million, you can start talking different transition periods and compensations. But it's so important to understand that sellers putting that as part of their value to you. Going back to the purchase price, you're getting a month of free training. What is that guy's knowledge worth for you per hour if you had to pay him, right, Chris, as a contract worker or as a W-2? You're getting as part of the deal. And as sellers, you got to remember that too. Now, what I see often with sellers and buyers is sellers sell the business and say, well, I need to get paid, $25 an hour to come in after the sale. Look, that's part of the goodwill you're putting in there. That buyers need you to help them. Now, obviously, we set up very often. The deal goes, 60 days after close, 90 days, et cetera. You can have the seller on call for X amount per hour, or if they're keeping equity percentage, you define those roles clearly. But I think too many buyers often want too many clawbacks and too much expectation that seller's going to be my lackey. And you can't treat it like that. And as sellers, I'm sure you've dealt with this too, Chris. You've got to be open to working with a flexible transition timeline. And that's part about picking the right buyer. If you don't trust that buyer, don't get to in the road now and start arguing over transition timelines. If you didn't trust them from the beginning, you're not going to want to be there after the sale. And that's a conflict point you're going to blow yourself up on. Don't do it.
Yeah, no, and I would say that, as a skilled negotiator, Don't go into a deal with a fixed script. I see so many buyers come in like, "Hey, it's got to be
Yes.
done this way. This is the way we've done it 20
This is
times."
the process,
Yeah,
right?
yeah. I mean,
Oh.
that's just like that's recipe for disaster. Go
Mhm.
in knowing the desired outcome, but have 2 or 3 ways to get there, right? And so if you know the other side's why, if you find out why the seller wants to sell, maybe the seller needs to be out in June because their spouse is relocating or having a life
Mhm.
change, your timeline becomes your leverage point, not the price. So don't
Yep.
go in, it has to be this way. We have to do due diligence this way. This has to be the multiple. There's other ways to work around that. And a lot
That's
of
right.
people aren't creative. I think that's where I come in. I'm usually trying to be as creative as possible. And some of these SBA rules that we got coming down, we're going to get even more creative, right? So,
Yes.
yeah, come in with 2 or 3 options to get a deal done, not just your way or the highway, because you're going to lose a lot of great deals, I think, that way.
You're not wrong. And also, you make a great point about SBA. Let's talk about financing and common pitfalls. How often do people just assume, listen to these gurus out there with no money down, and you're not properly preparing yourself to negotiate with money you have? If you know your max cap from the SBA, if you've gotten pre-qualified, which is a smart thing to do as a buyer to give confidence to yourself, the broker, but also the seller, is 2 million. Don't look at deals priced at 2.5. Just don't start with deals hoping you can knock them down 20, 25% to get to your max. You're going to be over leveraged. You're going to put the deal on too thin of ice, and you're going to waste months of time negotiating, most likely not to get it done. Buyers need to understand stretching your dollar to the last ounce. I understand wanting to maximize your return on the money you invest for a loan, but know what your real working capital for you, your family, and what you're willing to put up is really worth. Please don't over leverage yourself to get a deal done. Because that whole time you're working that deal, you're gonna be looking at your money going, "Oh man, Chris, my bank account's draining. It's draining." You then as a buyer lose leverage, and that seller goes, "Well, why should I take all this risk if you're not going to financially survive?
Yeah.
Why should I have to give you more and more seller financing? Because now you can't fund the deal you promised me."
Yeah.
Going back to the purchase price, going back to changing terms late, going back to those non-quantifiable issues sometimes. How many deals have we seen where the SBA unfortunately comes back and says, "Look, we like the deal. Seller's got to put up 5% more seller financing." And sometimes that's not the buyer's fault. Sometimes that's financials the seller hasn't put together properly. Maybe it's a loss of a customer, key employee, whatever the issue may be. But being flexible there, understanding that not every deal is going to work for you. And you have to have a walkaway point, right? You've got
Right.
to be transparent with yourself. And I think very often both seller and buyer are not always fully transparent with themselves, what they really expect, and they hold back a little bit. If you want us as brokers to truly help you get the best deal, you've got to be 100% honest with us. And I think that goes back to our previous point we spoke about. We all just met. Sometimes it's hard to get there.
Yeah.
But if you don't trust your broker, you're not going to be able to communicate with them efficiently, and they can't help negotiate, period. So let's talk about the mindset of a skilled negotiator. I just talked about trusting your broker. Keeping emotions in check is important. Don't let your ego get in the way. And I want to stress that. Do not let your ego get in the way. How many deals have we done, Chris, where both sides just draw a line in the sand because, well, I gave an ounce over here, so you have to give me this.
Yeah.
When you start playing that game, what's going to happen?
Gets
You're going
ugly
to lose it.
fast, doesn't it? Yeah, it
Yeah.
gets ugly.
And I understand one to give and take is negotiation. But as a buyer, if you keep coming back to the table and giving and asking and asking and asking, be prepared to give something up. You're not entitled to everything you want because you're buying that company. Let's make that clear. Now, you are entitled to financial review, due diligence requests, but you're not entitled to boss everybody around. And there are buyers who think that, like you talked about, they got their script. It's going to be done this way. Okay, just be wary when you've beat everybody up for 3 weeks. Is that seller going to want to give you any seller financing when you've been a jerk to him, right? Or
Yeah.
you found everything wrong with the company. If your mindset is to come in and find what's wrong to prove you were smarter, don't bother inquiring, please, because you're never going to get anything done. How many buyers do we see like that, Chris, where they got to show how smart they are?
Yeah.
That seller doesn't care how smart you are. Nobody cares about what are you going to pay me? When can you close?
Right.
What's my training transition?
Yeah.
And if you can't fill those 3 emotional ties to that seller quickly, he doesn't care what you care about his P&L. Don't do it.
Yeah.
Don't pick that fight. And honestly, I would even say this is we've talked about a little bit, but let's hit this main point. Understand the other party's motivations. And what I mean by that is if you've got a seller that's going to market in his 50s, he's testing the market, he's not looking for a low ball offer. Don't come in and offer 25% less just because for negotiation standards. Yeah. He's not going to take it. The broker's going to tell you that. So don't waste your time insulting him. Now, this is a seller that's retiring at 80 years old because they're sick. You as a buyer, you have leverage. But do the right thing and put a fair offer on the table. Don't just try and steal something. When I hear people say, I have to have something below appraised value, that is the dumbest thing I've ever heard from a buyer. Right. I'll pay 20% below appraised value for real estate. No. Who's going to do that? Why would you put that in writing? Right.
Yeah, I had a deal where a buyer was coming in, exactly what you just said. The guy had, unfortunately, had cancer, my client, and buyer was trying to take advantage. And what happened is he lost out on the deal. The gentleman decided, hey, I'll just pass it to my kids and they can deal with it. And I'd rather see them get full value. You know, that's got tax implications and all that good stuff.
Yeah.
But he didn't want to lose $200,000, $300,000 on his
just because.
Yeah, just because he knew his time was coming. And but yeah, you're going to lose out on some good deals if you go in looking to lowball people, and that's your strategy going in. I don't think it's a great strategy to buy a business.
No, it's not. And if you need that seller to help train and transition you or help in the future, and you lowball and gut them, their motivation to help you is about right here.
Yep,
it's zero. Let's talk about walk away. Go ahead. Yeah. No, go ahead.
No, I was going to say too, especially if you're going to have the seller stick around for a while. If he's going to stick around for 3 months, 6 months, a year, you're trying to screw this guy that's supposed to teach you everything about the business that you don't know and the 20, 30 years of experience he's got. Again, not a great way to go into a deal and get all his knowledge. It's going to be probably a little burned, and you know, maybe the deal happens, maybe it doesn't, but it creates friction.
You're not wrong. And don't just say business is business. I've heard buyers say that before. Well, it's just business. We're negotiating. We'll be good afterwards. You're talking about somebody's, baby, their livelihood that you just beat them up over. And now we're just going to forget about it and be best friends because I paid you.
Yeah, they don't forget.
People resent people. People have emotions and they don't just go away, Yeah. The best deals I see long-term are when the buyer and seller become friends. And they choose to become friends. Not that, I like this, he's paying for me, or, he seems like a decent guy. They make an effort to emotionally connect on some level, whether it's a common interest, fishing, hunting, down here especially, maybe LSU football. They find those connecting points, and they develop that relationship. And you'd be surprised as a buyer when you do that, how many sellers will go above and beyond to make sure a deal survives. Because they feel like, I like this guy. He's doing it right. He's treating me right. I know he's going to do right by this deal. Yeah. And they're going to go above and beyond and give a little extra when they don't have to. We talked about a client of yours yesterday. Like, I'm not going to let this place fail if so-and-so gets it. I'm going to help them and jump back in day one. We had that exact conversation.
That's right.
And that comes with, and that leads my next point, walk away. Very often I see buyers or sellers that can't let go of a deal. They just keep trying to renegotiate this and keep trying to renegotiate that. And our job is to help negotiate as much as possible to get a business sold. But sometimes you got to know when your walk away is. I've had some clients that just keep stalling. Well, I'll try another lender. It's like, look, this deal's just not going to work for you. You're not comfortable. How many buyers do we have that come in and they get to diligence and they keep asking and they keep asking and they keep asking. And it's no longer about verifying income statements, checking P&Ls, checking balance sheets. It's, what if this guy quits?
Yeah.
What if a tornado comes through? If you're that worried or the seller's dragging you out and you're getting frustrated, you got to know when to walk, man. That's okay. Right. Not every deal is meant to happen. It's unfortunate, but you have to know when to walk away. And too many buyers get caught up in, I spent $5,000 and I got to get my money back. You're going to have a couple deals fall apart. And you're going to spend some money on appraisals. It's going to happen. SBA SOP changes. Maybe you can't do your deal now. We had to renegotiate a lawn care company we're selling because the SOP changes. And the seller take on some more seller finance. But because they've had a really good start and good negotiation, man, fantastic. Yeah. Got another deal. The buyer wanted to buy the real estate and the business this year. Got the SBA, found out can't do both. Just not going to quite work. Seller's like, you know what? I understand. Let's just sell the business. I'll work with you. I've got some family that work in the business. Help me with them. I'll meet you here and I'll give you leverage here at a lower rent rate to get you going for a couple of years. But because that buyer came in and made a really good faith effort to meet the seller and develop a relationship, when he had to come back with changes to the deal, both sides said, we're doing this for the best for each other. I can make that concession to you. And I stress to buyers, and I know you do as well, and sellers, be open to it, but build that relationship first. Because when it comes time, and the SBA loan officer may say, hey, look, we got to make a change. If you've made those good faith efforts, most of the time, all parties are going to get on board real quick.
Yeah, absolutely. The preparation is key in going into these deals, not just financial preparation like we always talk about, but mental preparation for the seller, same for the buyer. Come into it willing to find those 2 or 3 avenues to get the deal done. Don't be set on one way. Understanding the potential trade-off between what the price is and the terms. Otherwise, you're going to spend a lot of the deal after the LOI backpedaling and trying to figure things out that probably should have come into it with a better clarity of how this deal was going to get done, and that you're open to kind of maneuvering around obstacles. So that's what I always try to encourage, is both sides to be clear on what's negotiable and what's not in the deal. And on those negotiable points, really, we're going to manage those, but let's work together.
Absolutely. So we help manage those issues, but let's talk about kind of some practical negotiation strategies that work. And I think a lot of people consider themselves deal makers, know how to negotiate, but for whatever it's worth, let us give you a couple of 2 quick cents that if you haven't thought about it, put it in your playbook, put it in your thought strategy. Anybody can put a buyer profile together to get through the door. But once you're through the door, that's almost more important than just talking and sourcing opportunities. First thing is, as a buyer, you can have questions you want to ask, but shut up and listen to the seller. Ask questions that allow them to give you open-ended answers and let them talk. You're going to learn more about that seller's mindset, that company, and the deal if you just let the seller kind of roll through issues. If you come in giving very pinpoint, P&L questions day one and pinpoint you're not going to get a feel for the business. So ask good open-ended questions about company structure, key employees, how the business got started, what's been going on lately. If you listen there, that's going to give you so much insight where to dig next for actual possible red flags, or just kind of how to learn about the seller to develop that relationship that we've been talking about. He starts talking about certain key issues in the business. Take some notes, focus on those, get with us. Often we may have answers to those questions. If not, let's go down that road first and be aware of what we might need to get worked through. Because if that's a deal killer for you and you just heard him mention, hey, I've never done any actual accounting on QuickBooks, and you're a guy that has to have QuickBooks, take a step back right now. That might be a deal killer for you. Don't assume you're going to go in there and you're going to get this guy who's never used electronic accounting software to magically just update everything for you to buy this business. And you don't want to spend the first 40 days in the company doing that, because you're not working with the company. You're working on clerical work.
Right.
The next major one we talked about, and we talked about giving demands. Offer options, not ultimatums. Right, Chris? How often do we see buyers say, I have to have this, or sellers, I have to have this?
Yeah.
You're not helping. Give an option or two.
Yeah, it goes back to what I'm saying. You got to come in with 2 or 3 options. I think the psychology behind it is, when you offer a single solution to a problem, people feel like they're backed into a corner. Like, this, I have to take it or leave it, is kind of what you're saying to them. But you throw out 2 or 3 options, like, hey, maybe more price with some seller financing, or a lower price with a quick close. You create the perception that the seller has control a little bit, of you're choosing which one we're going to go in. So you're offering different deal terms, and you're driving that deal towards your goal, which is to get it closed at the terms that you want. But you got to be negotiable on those terms. Otherwise, a lot of sellers are going to feel like, hey, this isn't for me.
No, you're exactly right. Now, a lot of times I see people, I only pay 3.0 multiple over defined net profit.
Right. The multiple.
So now you've boxed yourself into this category where if you're only willing to do that, you're going to have a very hard time finding deals. I've seen some buyers say, well, I got to have seller finance, some earn out, and I'm going to get a loan. Do you know how hard it is to get one of those, yet alone all 3 of those unrealistically into a transaction?
Yeah.
You're telling the broker and the seller right now, either I don't have the funds, which is most likely true, that I'm too scared to buy a business, so I need a whole bunch of, fallbacks to protect me because I'm so important. And then 3, if I don't get what I want, I'm not going to do a deal. You've
Yeah.
already disqualified yourself. You've had unrealistic expectations. You've not thought this through. And I always tell buyers, get in the mindset of the seller. Is what you're proposing sound realistic to them? And would you do it?
Yeah.
If the answer is no, then probably keep your mouth shut. Do yourself a favor. Control your own narrative. Be prepared to present the proper package, the proper view of what you're going to bring to the table. Because the seller's also interviewing you. Yes, you're bringing money to buy his business. He should be happy to have you. But he's also going to interview you, just like you're interviewing him. And if you're coming in with that mindset, it's going to be tough to find common ground. And that's where we come in as brokers to help, break that ice, get some familiarity. But I think the single most important piece of advice we can give you in this realm is when you talk about set expectations, offering options, that boils down to how you want to structure your LOI or offer, right, Chris?
Yep.
I'll let you take the lead here, but I want to make this one point. How important is the LOI? What you put in writing for someone to sign matters, whether it's binding or non-binding. I'm going to say that again. It matters. And if you give someone your word and you write on paper and you both sign it, be prepared to have the other party hold you to it. And Chris, I'll let you talk a little bit on that, and I'll finish up with some anecdotes and also just key points.
Yeah. On the LOI, I've had too many buyers throw it out there like it's a placeholder, right?
Yes,
and it's absolutely
that is so
not.
true.
I like to tell them it's a blueprint. Yes, it can be non-binding, but if we're not putting in all the details to how to build the house, that house is going to fall apart when things start to shift. So key points like working capital I mentioned, transition expectations, seller financing. If those aren't addressed early, you're going to spend the entire purchase agreement phase untangling all the misunderstandings or the lack of communication that should have happened when that LOI was put together. I have a very specific list that I have to even present an LOI to my clients. And if I don't have timing, I don't have what your working capital, stock sale, asset sale, you wouldn't believe the amount of LOIs I received where they don't even address whether it's going to be a stock sale or an asset sale. And then we get into the purchase. Oh, it has to be this because of contract. Well, that should have been addressed because that changes the tax implications. It changes how the business is going to transition. But yeah, they just throw out an LOI with a number on it and say, hey, can we start making things happen? No, because this is going to get ugly, and we're going to be 2 or 3 months into the deal before we figure it out. So the LOI sets the tone, and I encourage everybody to use it wisely. Yes, it can be non-binding, but use that document as the starting point and try to lay out. I know you don't want to get overly wordy in it. You don't want a
burdensome.
10-page. Yeah, you don't want a 10-page LOI. But I have no problem with the 3-page LOI versus the 1-pagers who don't give enough details on how we're going to get this deal done.
Let's talk about those details. My biggest gripe is a termination date. I can't tell you how many I see that have no real timeline when the LOI is going to expire, which boggles my mind. The second one is market exclusivity. They want it taken down off the market and held for 90 days, right? That's pretty standard, which for the right buyer coming in the right LOI, that's not a bad thing to ask for. And think about the seller. You want me to take out the market for 90 days while we kind of figure this dance out? They're going to look at that and go, that's a tough pill to swallow, right? And you can have exclusivity with an LOI and the business still being marketed, not accepting offers or having conversations. But as a buyer, we talked about building that relationship, right, Chris? You come in, you do it right. When you ask for terms like that, the seller and broker are going to be more open to doing that. They're not going to be as reluctant. They're not going to be like, there's no way.
Yeah.
How often do you see LOIs that come in that we want it off the market right now, no one else can talk to it? You've only met the seller once. You've asked no real legitimate questions. Your LOI is a 1-page, kind of worthless document, and they're going to come back and try to renegotiate everything. There's a lot of old school sellers out there that say, when I do a deal and I shake your hand and I sign this document, I want to abide by those terms. Now, if something comes up that's really a problem, yes, things will be renegotiated. But in their mind, that's our deal. And when you start renegotiating it and you're not setting proper expectations up front, what you're telling that seller is, my word doesn't matter.
Yeah.
You want to talk about kill a deal?
Ooh.
Might as well just start tearing it to shreds. It's a worthless piece of paper.
Yeah, for sure.
As a buyer, if you're not sure how to draft an LOI, talk to us. Let us give you some tips before you just submit it and say, it's my LOI, this is what I do. And look, I will say this. If that's your way of doing business and you stand by it, I respect that. Be consistent. But just know it's going to be tough. I mean, we had a deal, we presented a $3.75 million LOI for a lawn care company, and the group had to have seller financing. That was non-negotiable for them. What'd the seller say, Chris? Nope. Ironically, a year later, what did he do?
Yeah.
He did some seller financing. So sometimes how you come in matters more than what you're trying to force.
Right.
So let's talk about when negotiations get stuck. We talked about getting creative, finding value elsewhere. What are some key strategies you've used in the past, Chris, to kind of create value? For me, it's a salary for the seller at times for transition, especially the new SOPs might change that a little bit. But also, I stress to the owners that seller financing, if you're not going to get your max price, take less, but seller finance it. You're going to get the interest payment. You're going to make more money long term, the total consideration. What are some creative things you've used in the past to kind of get through those kind of bigger speed bumps that buyers and sellers kind of sit there and go, I don't know how to make value or how to create some value here to make it work?
Yeah. No, that you just answered my question. Where else can we create value? That's the question I ask myself. When we get stuck in a deal, somebody's not feeling like they're walking away with the value, whether it's the buyer or the seller. So from that perspective, maybe the price is fixed. That maybe that's not something we can change. Like buyer's not going to pay more, seller doesn't want to take less, but you can negotiate a longer transition. Maybe a seller consulting agreement can come into play. Hey, his time's valuable, and it could be $500 an hour for his time, or maybe a flexible earnout. I know a lot of sellers aren't really keen on that. I'm not as well, but hey, when you get stuck, you're throwing out all options out there, and everything's got to go with it. So I guess the final point, you try all those options, you try those 2 or 3 different paths, but I'd say this too. Sometimes you got to be willing to walk away. And as a broker, I hate that, right? We're tied to that, but sometimes, like if the buyer is insisting on something and that's not something you can give, and we've tried 2 or 3 different options and it's just not going to work out, you also have to have that as an option, that sometimes deals are going to fall apart and sometimes they need to fall apart. It's not the best deal for you. We've got more time to sell. We've got other people who are looking at your business. We'll go back to them. Yes, it's going to be painful and we have to start the process all over again. But I've recently had a deal where the buyer was trying to take $1.2 million from my client just for the whole net working capital. We weren't going to do it. And so I tried throughout 2 or 3 different options. One was close later in the year. Let's close in October or December where net working capital is going to be back to the normal range of where we made this deal at.
A very seasonal business.
Yep. And the fact that they wouldn't go for that kind of says they were trying to steal something a little bit, right? Because why would you just not wait 6 months to close the deal? I get that you got to go do other things and invest your capital somewhere. But the fact that they so quickly said, okay, not for us, we're walking away, it assured us that we made the right decision of this isn't our buyer.
And let's talk about that deal a little bit. Their goal was to close very quickly, and then it got dragged out, and then it got dragged out. And then the terms at LOI were not being followed as structured. And
That's right.
that kind of loses faith. And it makes it harder when it's time to renegotiate issues like that because they didn't meet the timelines. They didn't set expectations, control the narrative. And then they wanted a fundamental change in the deal structure. And that just doesn't work sometimes. Another thing we see often too for when deals get stuck, often the seller brings in a lot of value to the company, not just in their administrative ability, but in their sales. A lot of times I tell buyers, give them a percentage of new sales they bring in if they're going to hang around for a while, like talk a consulting agreement. Give them a percentage of that new gross. Don't be afraid to give a little bit of gross income and bottom line to keep that seller around to bring in more buyers and give brand reassurance.
Yeah.
That's an easy way to build in some back value without running any risk. They don't bring in new business. It doesn't hurt you. They bring it in. It's going to help your bottom line.
Yeah.
It won't be as profitable, but you're going to make that deal work long-term and develop a good customer relationship. The next issue when negotiation gets stuck, I think, is when parties rely on the wrong team. Often we see people love their family CPA, their family attorney. Sometimes those professionals or their bookkeeper, right, are not the right person for the transaction. We've had clients request, even buyers say, hey, that seller's attorney needs to go, not because I want to get a better negotiation deal, is that I don't think they understand what we're drafting. And we don't want to do a deal in good faith, knowing the seller didn't understand the deal or get good representation. And that's a fair argument. Or we've had people bring in their family attorney and their family attorney blows the deal up, right?
Yeah.
I mean, I'll give you a great anecdotal story. We had a bakery in South Louisiana. I won't say what town. We negotiated the deal. We got to the table. And the seller's attorney says, we're not paying what you're owed. You take this much off, we'll do the deal. If not, we're not doing it. And the buyer looks at us, and the buyer looks at the seller's attorney. He's like, are you kidding me? I mean, I had to check right here to pay you today.
Right.
And the buyer says, I'm not doing the deal because I can't trust you now as a seller. And that's not right to the guy who's done all the work, the broker. So they both walked. Having that right negotiator with you, your right attorney, CPA, whoever your advisor is, make sure they're on the same mindset as you, but also that they're giving you good advice. Too often I see people rely on their family attorney to review documents. They don't do business transactions. They may be a great attorney. They may love you and care on 1,000% for your best interest. But if they don't know what they're looking at, that's a problem. And here's another good story, Chris. We sold an HVAC right at the end of COVID. The seller wanted his attorney involved. He's the best attorney ever. Great guy, great guy. Go to the table. His attorney signs off on everything, right? The closing attorney who the buyer had to have, wouldn't use our guy, was so great. You can see where this is going probably.
Yeah.
We get done. They forgot to do the titles for the vehicle switched. Our attorney does that automatically. He makes sure all the titles are already taken care of. So they walk out the door and go, well, y'all didn't handle the title transfer. I said, we don't transfer titles of vehicles.
Yeah.
That's the attorneys who you both told were great, didn't even notice it or care about it. And we brought that up the week before.
Yeah.
But y'all wouldn't give us a copy of the closing docs till the day of. So we're sitting there trying to read through. You know how big an SBA loan, mind you, this was an SBA loan. So you know how long that's going to take to go through.
It's a stack of paper, isn't it?
Yeah. And nobody caught it. Now, Is that a mistake on our part? Possibly. But when you're not letting us see the documents and you're printing brand new ones and walking them out and we're saying, did somebody get the trucks? And everyone's going, we got them.
Yeah.
Well, your attorney who you said was the greatest guy ever didn't catch it. And the closing attorney who doesn't really handle business transactions but could handle it because he's from your hometown, small hometown, guess what? Failed to catch it.
Yep.
Even the lender did. But that just goes to show you why you need the right people in place and you use professionals who've been in those scenarios before, right? I mean, how often do we see we have to talk to the family attorney even before we list a deal and the family attorney or CPAs tell us about the value of the deal and they're completely off, right, Chris?
Sure.
It's no reflection upon them, but it makes it a lot harder. Yep. I'd also know, you mentioned this point, but I want to re-highlight this because I think it's important, and I want you to give me your 2 cents. Time is important. When deals get stuck, I see sometimes people are pressing to give a response right away, and I like timely responses like you. I think it's important to keep deals moving along and people to communicate. Sometimes I tell people, take 3 days off. And that might sound crazy. Take that time off to think about this long and hard.
Yeah.
Don't be reactive to every request or response a seller or buyer gets. Sometimes it's important to wait a day to think about a response to an offer change. Now, if they're requesting documents, come on, snap, get it done. But it's okay to take some time and think. Because the last thing you as a seller want to do is if you're open to the buyer's changes right away and you go, okay, I'll take that. The buyer's going to go, man, I should have fought for more, right, Chris? I should have offered less. So now they're going to, the back of their brain, they planted that seed. They're going to go back and say, maybe I should ask for something else, right?
Yeah.
Don't be that person. Take the time, be sure in what you agree to. If you're just agreeing to everything and then you realize, hey, I didn't talk to my CPA.
Right.
Hey, I didn't think about this. I didn't think this through. I don't want to do it now. Well, if you've already promised somebody and we've signed a counteroffer or signed documentation, you're obligated to that. That's keeping your word. And too often I see people rush to try and get a deal under contract and then go, oh man, I didn't really like that term. I didn't think that through.
Yeah, absolutely. I have to coach my clients before we go in. It seems like it happens way too often. We go into a video call and the buyer proposes some renegotiation. Maybe it's small, maybe it's large. And
okay.
Yeah, I see my clients. I've had this happen. I try to prevent it now, so I prep them before we go into this video call a lot more than I used to. But hey, we're not going to make any major decisions. They throw something out that's a curveball. let's just say we're going to think about it. We'll get back to them in 3 days, 2 days, 3 days, whatever the case may be. But
Mm-hmm.
yeah, that's the negotiating, right? It is like taking it in, thinking about it, making sure that you're not losing value. If we need to
Run the
give up that
numbers.
value, yeah, if we give up some kind of value in one direction, we can get it back somewhere else. Especially if we're under LOI and it's already kind of been drafted of what we're
Mm-hmm.
working towards. But yeah, don't part of negotiation is not making a quick negotiation. I think it's about taking that time to consider everything. Like you said, documents. You need a P&L tax return, balance sheet. I'll have that to you in 20
Chop chop.
seconds. Yeah, you want to talk about what the net working capital is and how we should average that over the past 12 months and what's going to play a part in that. We're going to take a little bit more time to make sure that both parties are getting a fair and equal treatment there.
Absolutely. That's part of our role as the broker, right? Kind of one of our last points we're going to get to today. It's not always easy to quantify our time and tell people how that time is going to be spent because every deal is different, right?
Sure.
Every deal, every buyer, every seller, what our time involvement is, what our time renegotiating is going to be. But you made a great point on prepping people. I always tell buyers and sellers, don't get into negotiating minute details on a Zoom call, like you said, or an office meeting. That's not the time for that. The time is to talk about the issues and talk about what's going on. And as a buyer, I would recommend to you, don't come in there, start trying to offer deal changes not in writing. Because I've heard conversations occur and all three parties got different interpretations of what was said. It's better to have that discussion, let us as the broker draft it so that it's clear and verified. Because I've had sellers think they understood the word seller financing. And especially when you talk about full standby with the SBA, they don't understand what that means.
Right.
And sometimes the buyer doesn't really understand what it means either. Even the lender told them. It's like, guys, let's make sure we know what this means and how it affects debt service, how it affects your walkaway, your total consideration. Keyword again there. Let's get it on paper. Nothing is worse than negotiated parts of a deal verbally that happened weeks or months before that both parties thought they heard, and now it gets down to the table. Expectations were set, and guess what? Now they're not going to be honored, right? I mean, and that's knowing when to push and push back. Like, hey, we discussed this, but we never agreed to it in writing, and we never said we're going to do it. Now, if you think that's a key issue, let's put it into closing documents, right, Chris? I recommend to people to, there's some things you have to have a handshake on. That's called trust, relationship building. To keep fundamental parts of the deal, know as a buyer and a seller when to have that in writing in the deal. Don't just assume. Don't hope. Doing your part, putting your time into it, that's a trust issue. You can't necessarily write that into a deal, right? You can still do 40 hours a week, but if it needs to be 45, you hope the seller's going to do it. But don't expect to drag people along in parts that you can't put stuff in writing. I see too many lawyers want clawback lists that go on for God, how many pages, Chris? It's like you can't treat every transaction that way. Some deals you just have to have a little bit of trust, and part of that's building the relationship when you come in as a buyer so that you know you'll get that. And don't be a jerk to the seller. And vice versa to the seller. Don't be a jerk to the buyer, then expect him to bend over and give you everything you want in the deal. You know?
Yeah.
It's a two-way street.
Absolutely.
You know, that momentum, that is what drives deals. And as a seller, your mindset is, well, I'm here to sell my company, but for the best price. You know, I'm not doing otherwise. If you're coming to the market to sell, you have to be open to selling and what it's going to take to get that deal done. If not, you're going to own that business forever. But just know at some point you have to divest of it. Whether it's pass it off to children you have, pass off to family, give it to an employee. Being flexible and being open is going to help you be more successful. And as a buyer, I'll get some final takeaways here to you. Get pre-qualified if you can. If you don't have a checklist what to ask, talk to the broker, listen to him. Don't assume the broker doesn't know what he's doing just because you don't like what he says. Very often we get pushed, well, I don't agree with that. Okay, maybe you don't. Maybe we're wrong. But our company has helped over 850 transactions. How many have you done? Right? I mean, that's not me giving you a big old flex. That's not me being, oh, look how great we are. We do this for a living. Just like how you trust your lawyer. You can disagree with your lawyer's thought, but you trust their legal opinion. Trust our opinion. Be open and listen to us. You don't have to agree with our thought process on negotiating. You may want to be more aggressive. It may work. That's okay. But trust the people in the room and learn to listen. If nothing else, use 2 ears of one mouth, as my dad always said. There's a reason we have 2 ears in one mouth, the ratio. Listen, 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 right? I mean, if you're talking all the time, like me in this podcast, you're not learning anything. So I guess I'll let you give a final sentence so I can learn something at the very end.
No, it's great. We talked about negotiating, right? So negotiating is absolutely where deals are won or they're lost. The price might look good, and that maybe that's all you're looking for, but if the terms don't work, what's going to happen? That deal's going to die. So hire a good broker. If you're ready to sell your business, sharpen your negotiating skill set, be open to 2 or 3 different options like we talked about. And this is what's going to separate you from selling your business or not selling your business for the best price, the best terms, keeping your employees at the business, and finding a great buyer.
You're absolutely correct. And on that note, we thank you all for joining us today. This podcast is going to drop real soon. Comment below if you have any questions. I'm Brandon Bourgeois. That's Chris Sater. This is the Steps to Soul podcast. We will see you next week with a special live edition from the annual Sunbelt Conference in IBBA. So keep tuned for some cool and fun updates. Y'all be safe out there.
Bye-bye.